What is good, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's going on with Tesla, SPY, Nvda, the QQQ, and a couple of other tickers. I'm also going to break down what's happening with the overall economy right now as we had the Fed beige book come out, not to mention new updates involving Israel and Iran. Before I break down most information, before I get into any more details, let me just mention a couple of things. I'm personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Weeble link, which is down below and in the description. If you sign up for Weeble and deposit $500, you're guaranteed 20 free stocks. If you deposit $25,000 or more, you're guaranteed 75 of them. And all friends in just about 13 days from now. Anyways, when it comes to the market right now, SPY is looking relatively weak. We had this high right here. We were trying to rebound, hitting 506, trying to push, and the move ended up failing as we came down, and we continued to sink as the day went on. Then, as the Fed beige book came out, we saw the market kind of rebound a bit before it continued to dip, and we're still looking relatively weak because we're seeing sellers continuing to step in. Now, with SPY kind of looking the way it's looking, with the market kind of selling off a bit, the reason why this is happening involves a lot between Israel and Iran. So I want to break down more details about why that is and also talk about the beige book before I break down these charts and their levels. So for the Fed beige book, this came out at 2 o'clock p.m. Eastern Standard Time today. And also later on today, we have Mester and Bowman giving speeches in the evening. Besides that, we have initial jobless claims in the morning, and we just have more Fed speakers pretty much for tomorrow. But for the Fed beige book, this was very important. So this is a very, very important publication that comes out from the Fed that gives us more insights on how the economy is doing. But I think that this has more to do with like present data or even data from before, and less to do with data that could be projected given how things could change. So as of right now, the six districts are saying that their contracts had reported slight or modest price increases and two noted moderate increases, while five districts, also noted that the overall price increases have subsided. So that's what they're saying so far. They're also saying that employment has been stable with decent wage growth so far, in their opinions. Now, with the U.S. economy has expanded slightly since late February, according to the Fed beige book. They're saying that the firms reported greater difficulty in passing on higher costs. That's what the Fed is saying. And there's also this news right over here that there's modest growth so far as the easing of price pressures has continued. They're saying that most firms indicated that pressure to increase wages continued to ease, and the growth in pay was closer to historical averages. Now, maybe this has some merits based off historical data, but I just want to make it clear that for the future, this doesn't really guarantee anything because the situation could always change. And I can't solely just say that everything's going to be okay, everything's going to be fine for wages, for inflation, and such, just based off this. Because remember, this is all based off delayed data and data from the past. Historically, the data could change a lot depending on what happens with global events. So, right now, the market is very fearful. The market's panicking right now about what's happening right over here. So, with this whole situation, guys, Iran and Israel, I don't really want to point fingers or once again give you the full history of everything. I just want to say this. Over the weekend, Iran launched their retaliatory attacks against Israel, right? They did that and they launched 300 missiles. Israel intercepted almost everything. And instead of backing down like what the US is urging Israel to do, alongside many other countries for Iran, Israel is saying that they're considering striking Iran on Monday. That's just a couple of days away. But they decided to wait. That's what the officials are saying. They considered doing it on Monday. Also, in the future, they may continue to do it again. They're threatening to attack Iran back after what happened. And Iran is saying that, hey, if Israel attacks us again, they're going to attack even more severely. So it's very, very insane. Both sides are attacking each other, threatening each other, and the situation is very tense. Now, why is this an issue? Well, the issue is even though gas prices, oil is not like going up like for now, even though oil crude is not increasing a whole lot yet, it has the potential to do so, and the market is very forward looking. The first issue is if there are more attacks, crude is going to increase. You have to remember that. Inflation is going to go up, and this is going to have a big effect on the Fed's policies. It's affecting global ties as the US is putting more sanctions on Iran and other factors like that. This is also affecting other countries, trade, and so many different factors, and the market's not liking this. So the more threats there are, the more risks there are of each of these countries attacking each other, the higher the probability is of inflation going up here, crude eventually going up. If they do end up attacking each other, it's going to go up. And the market, is super forward looking. The market may be using this as a reason to start dipping, and the market also loves to price things in well in advance. So the more tense the situation becomes, and the more these countries attack each other, the more the market's going to be panicking and using this as a reason to dip more. There's also, like, the bonds affecting the markets, not to mention our treasury yields and all these other factors out there. And then don't forget about what else is affecting the markets would be cyclicals. So we are in a cyclical period where the market should dip, and that is what's happening. So everything is kind of aligning for the market to dip in terms of cyclicals, algorithms, and all these other factors. And also this Israel and Iran situation is still very, very tense. So with that being said, what's happening right now? SPY is kind of shuffling. We're seeing some buyers trying to defend this 500 support. If we lose 500, this thing could easily fall to 497 to fill its gap. SPY has not completed its gap fill, so there is a risk of more downside, and the share price and the price action is still a bit more bearish. When I zoom out and go into the daily time frame, you guys could quite clearly see this. SPY is looking quite bearish. We have this gap to fill. We're not all the way there. Could we rebound just a little bit here and then continue to fall? Yes, we can. But overall, the chart is still weak, and there is a risk of it falling to fill that gap. For Tesla, now, Tesla's a little bit flat right now. I just want to call out that if you look at the hourly time frame on Tesla, we're kind of range bound. We have this very, very nice range on Tesla. Let me just fix this chart for 1 second. So this is what the range looks like on Tesla right over here. As you can see, it's been going back and forth for the last 2 days. We have resistance at 157.5 and also at 160. We have support at 155 and then 153.8. Tesla's been stuck in this range, and it's been, stuck for a very, very long time, going back and forth and back and forth. And there isn't really a whole lot going on with it, so you just have to give this more patience and more time as time progresses. But looking at Tesla, with us trading sideways, not really doing a whole lot, we have to be very, very patient with the way that this is developing. And I just want to make it very clear that there is a risk of this dipping a little bit more. So you want to be very careful with this from a technical standpoint. Nvidia is also at risk of dipping more. We had a very, very bearish day. It came all the way down to about 845, and we could dip lower. Let me just call out that on the daily for Nvidia, like this, there is a risk of more downside. We have this big gap to fill in the 820 area. So it's going to likely come down to fill this gap, in my opinion. And I think that this could lead to more downside, at least for the QQQ. So NVIDIA is going to contribute to that. And I think that NVIDIA is showing a lot of weakness. The QQQ came down to fill its gap at 427. We're trying to pop a bit, but I think there's still a risk of this dipping lower. We have this other gap down here, and then there's another gap all the way down here at like 412. I think 421 is going to be our next target if we lose 425. And if 421 fails us, we're easily going to fall down towards this 418 area. And if that fails us, if 418 fails us, we could get close to about 413. So you want to be very careful on the QQQ. There's definitely a risk of more downside, and the chart is still looking kind of weak. For Aapl, we're looking more bearish as well because we tried to rebound. We retested 170, almost going up to 171, and then we collapsed, and now we're back down to 168. So the chart is still looking a bit more bearish. For Amazon, we're sinking towards our support at 180. We're still holding 180. So we're still holding above that. If we lose 180, more downsides coming. Otherwise, we're just going to continue to shuffle. And that's what I see Amazon doing, at least for the time being. Not anything too crazy. For, let's just see, Meta. Meta is just barely trying to base right over here. It came all the way down about 488. We have resistance at 497 to 500. We're kind of stuck right now. There's a risk of it dipping a little bit lower towards 492. Still looking kind of weak, and we'll have to see how things go. The VIX, still kind of flat right now. We'll just have to see how this goes as well. As for the VIX, it's still holding up. If this breaks out even higher, we could still see downside. It's still holding support at the 50 EMA, and it's still not showing signs of kind of like collapsing it. So you want to be very patient. For now, the market's showing weakness, so just be careful, guys. We'll see how things go for close. The market closes in just a few minutes. But then, as of right now, the charts remain bearish, and we're going to be watching our ranges and supports very carefully. All right, so thank you for listening. I hope you guys have an absolutely incredible day. I'll see you guys very soon on the next one in just a few hours, and peace out.